Happy Friday, traders. It's 8 a.m. Chicago time on the 7th of February, 2020. This is episode number 1688. Thanks for joining me today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we had a key number, non-farm payroll unemployment number, which came in pretty strong today. The release was expected to come in at 148. The consensus was up to 160,000 jobs, and it came out at 225. The forecast for the unemployment rates in line at 3.6%, and that's behind us. Um, the overall market stance is um, somewhat in a move to safety. Looks like a little bit of a risk-off sentiment today. The bonds are leading up 26 ticks. The Bund is up 38 ticks, and the 10 years up 9 big ticks, 18 regular ticks in the futures. And gold is trading up $1.70 or 0.11%. Crude oil is the loser today. Again, crude oil's stuck in this really big area that I've talked about here and in the Convergent Head Trader channel. In the 50.75 area, this is a big, not only is it the $50 price, but it's a big composite high volume node and an area of balance, and the market seems to have a memory of it, and it's stuck here trading at 50.43, down 52 cents or 1.56 cents, or 1.1% down. The Russell's the weakest of the indices, followed by the DAX, then the Nasdaq, Dow, and the S&P. Again, risk off this morning after new all-time highs yesterday in the S&P at 3346.50 on the day session. So that's where we stand. The number did come in strong, but the market responded by selling off the SOC, or the scene of the crime, or the point at which the auction was interrupted by the non-farm payroll release. Was at 339 3,339 and 0.75. 3339.75. We're currently trading at 3335.75. We're below where the number was released. So pretty interesting action today. It looks like we have a pullback day on all-time highs, but don't forget also that we're coming into the weekend. Pretty busy week this week with the coronavirus news and impeachment and so on. So that's where we stand. Let's take a look at what was expected yesterday. Yesterday, the primary expectation, given that we were gapping up, what I expected was a push higher into 47.75-ish, and then for it to fall back into the range, get back into the 28 area below, bounce back up, and then finish basically in line with the prior day at 24. That's the primary scenario. What happened was more like scenario 2, where we dipped down into towards the range, pushed up, and just held sideways. Really, none of the scenarios fit very well. It was a pretty noisy trade yesterday, a very scalpy trade. And that's what it looked like. So we opened up, we moved right back into the range. Remember, the high of the prior session was right there at 36. We dipped into the range, touched the close, consolidated, and pushed back up. We got above the midpoint. I expected the midpoint to hold. That did not happen here. Little bloop. And then it pushes right back to the opening print. Remember, these dotted green lines are the opening print. And then it falls right back into the range and gets pushed back out through the mid. So here we are, crisscrossing the mid after an impulse down. This tells me, hey, back off The market is pushing into balance. That was a comment I made in the Convergent Head Trader Head Trader channel. And then we walk back up. Now we have a double IB high. This is a stat of 82%, 82% probability that this high would be taken out, historical probability that this high would be taken out by the end of the session. And there we are. We end up pushing through and fulfilling that stat. Actually, it didn't fulfill the stat. It just did what it does. And the stat is just a measure of that. And then from there, we were just stuck in this box between 39.75, which is incidentally the SOC for non-farm payrolls, and the 45.50. We were just stuck here in what was a normal day with a valid value area. The value area for yesterday is between 45.50 and 40 even. We're currently trading below that at 34, so my expectation is if it tests up, it's likely to get rejected and pushed down. That would be the expected behavior. Still targeting 23 even, the naked point of control down there. That's what I'm looking for. That's also a big balance area down there with an MC point of control at 2250. That's this. Okay. So overall, you notice that, just like price, the delta, and let me just kill these fractals here so we can see it. Notice that the the delta had a really difficult time staying above zero yesterday, just like price had a difficult time staying above the open. And it finished relatively weaker versus price. Price finished just above the open delta. That just seemed like the aggressors overall in cumulative fashion, the aggressors were to the sell side. Um, the move up yesterday was really contested all the way up. Let's shoot over to Bookmap. Actually, let me go back here and look at the overnight session since we're walking it anyway. So here it is. This is yesterday day session right here. And this is the extended hours right here. Non-farm payrolls. Nice little scalp. We push higher right away. We fall back in, and then we consolidate in the middle. The profile shows that there was really no interest higher, and then it just builds this double distribution profile. And we're in the lower distribution. Notice VWAP mid on top of each other, the point of control above us, and we are sitting here. The line in the sand this morning really is the non-farm payroll SOC in the 39.75 area. Really, 37 to 39 is an area to watch this morning. If it's not able to test or hold above there, it is likely to explore down again to 23, 22 half. That's the big trade of the day. That's scenario one for today, basically in summary. Here's what's happened in the order flow. There's your non-farm. This is the non-farm. Really, it doesn't move at all. I mean, this used to be a big mover, a number that blows out, 148 to 225 in the past would have seen a push of 10, 15 points. Now it hardly makes a move. It's just the nature of the beast right now. The market's already pricing in a lot of this good news, and we've seen this unemployment train kind of truck along, and it's remember, we're pricing in future expectations here in the business of trading. And it's the market's just not, not impressed, so to speak, with these numbers. They expect these numbers. I'd love to see some surprises, and we just don't have surprises. Everything is choreographed and controlled. and it just it makes for relatively poor opportunities for trading, great opportunities for investing, and that's the environment that we're in currently. Everything is really choreographed. In terms of the order flow, you could see that the bigger participants have stayed away. God, this financial juice, man. It's just the guy's always yelling. Um, the what was I saying? The order flow overall, it just seems like the liquidity has stayed away from the current action. You can see that there's you know a lot of dots that follow along here, and then after 7 o'clock, a lot of machines turned off, and you can see that there's the volume has really dried up, and it continues to remain dry after after the non-farm payroll release. Liquidity below us in the 25 area, and then also in the 20 to 22 area. And then above us, it's like really not, there's not much there until 54, really. It just looks to me like it's a very, uh, it looks to me like it's gonna be a very choppy, quiet, gritty kind of day. Okay, so that's what we're coming into today, based on the way the market is shaping up in terms of order flow and context overall. I'm not going to expect that today is going to be some sort of earth-shattering opportunity for all of us. That's what's in the order flow. Again, that's ctbookmap.pro. Now, let's move into what's expected for today. We're opening down here. Point of control is up here. The close is up there. The close is up near yesterday's IB high. The S&P closed at 45 and a quarter. The IB high was at 45.50. The point of control is up at 44 basically, and we're currently trading 33 half. The primary scenario is expected to be a relatively choppy open auction in range. I'm looking for a drift higher. Ideal situation, it pushes back to the SOC at 39.75, consolidates in here and falls back over, and then starts to work itself down into the overnight stat, and then eventually, if the auction was to proceed as per normal, eventually tag that 23. I don't have high hopes for a market that's likely to give us 15 points today. I don't expect that. I don't anticipate that at all. 15, 16 points, not likely. But that's the natural, if the auction was to follow its normal process, we're below the prior value area. We would likely test from below. I expect failure and a rotation out. I expect the overnight stat to be taken at the 2750, and then a test back into balance into the 23, 22 half area. But I've got to tell you that I don't expect very much, and I happen to be traveling today. I won't be around. So I don't really care if it doesn't go anywhere. But non-farm payroll, man, it just doesn't move around very much. Secondary, we open in a choppy environment and then just fall right off, and then just continue to chop lower into the overnight low, and then just consolidate back in, come back into the range and hold steady here into the close. That would be scenario 2. Scenario 3 is one where it's remote, but it's there. Scenario 3 is one where we fall off immediately, impulse up, come back into the value area high, and push the point of control, and then start to squeeze any shorts this morning, squeeze them out, and push into the 33.50, which happens to be the overnight high, for a close that's relatively strong near highs here. That's scenario 3. Okay, so that's how it looks. Now, I threw in the fact that I'm traveling today. For those who've been following since 2008, 12 years, you probably know that there's actually a statistic associated with me traveling. Essentially, 8 out of 10 times I travel, those days happen to have big news and happen to be very volatile days. So I'm warning you that I'm traveling today. You play that stat how you like, but it's a running joke among followers and those who know me that if I'm traveling, the market's probably going to yield more opportunity. In other words, I'm taking one for the team. So I am traveling today, so keep your keep your risk at bay and enjoy the day. Hopefully you gained something this week. Hopefully you made some headway and you're keeping your risk in check. We want you back here every day. Make your losses small, make them count, and make sure you're able to come back and continue trading the next day. Given that it's non-farm payroll, you expect a lot of chop and expect a pretty sluggish Monday. So I'll leave you with that. Hasta la vista, and I wish you all a safe and happy weekend and some solid trading. Good luck. Take care.